Good morning. You're watching All You Need to Know on BloombergQuint Live, and I'm Alex Matthew. First, the headlines. The U.S. Federal Reserve leaves benchmark interest rates unchanged. Chairman Jerome Powell, however, says that policy is appropriate to sustain economic expansion. The death toll from the coronavirus outbreak has risen to 169. The World Health Organization will hold a meeting today to consider declaring a global health emergency. Shareholders of Interglobe Aviation reject amending the Articles of Association that would allow promoters to increase or reduce stake in the airline. And the Reserve Bank of India has imposed a fine of 1 crore rupees on HDFC Bank for non-compliance with the Know Your Customer or KYC norms. And 4 Nifty companies, Indian Oil Corporation, Bajaj Auto, Tata Motors and Bharti Infratel, report their third quarter earnings today. Let's talk about the U.S. markets first. U.S. benchmarks ended little changed on Wednesday and off the highest point of the day, assessing the Fed policy and also the impact of the coronavirus outbreak. Now, shares of Boeing were the biggest drag on the Dow Jones after it posted its first annual loss in 2 decades. Abigail Doolittle of Bloomberg News wraps up the trading action in this report.
Wednesday's Wall Street session was characterized by skittish trade. Early on, there were solid to modest gains for the major averages, including the Dow, the S&P 500, and the Nasdaq. But by the end of the day, at the close of trade, 4 p.m. Eastern Time, small moves and mixed. The S&P 500 closing down by about 0.1%. Both the Dow and the Nasdaq finishing slightly higher. Now, making this perhaps a bit risk-off, we had a pretty solid rally for bonds. This as copper, Dr. Copper, often seen as a tell on the state of the global economy, fell for a record 10th day in a row. That's the longest on record, going all the way back to 1988. In a correction over that time period, the worst slump for copper since 2015. So when you have stocks basically flat or over a time period higher as copper falls, some may question whether or not that suggests there could be some bearish action ahead for stocks, especially given the copper slide being on coronavirus fears and the idea that perhaps the Chinese economy and factories are slowing down right now. As for some of the bright spots on the day, though, that came from earnings. We had Apple climbing more than 2%, a record high. Some analysts saying they put up a blowout December quarter, that the results were really just very, very strong. We also had the shares of GE, General Electric, climbing in a big way, up 10%, the highest level since 2018 after they put up a very strong fourth quarter. In addition, the 2020 outlook relative to free cash flow, better than expected, many saying CEO Larry Culp is succeeding with his turnaround. And interesting is the fact that Boeing, those shares rose by more than 1.5%, even though the quarter was a little bit disappointing, the first loss on record going back to 1997, so in 22 years. But investors like the fact that it appears that they're going to be able to receive $14 billion or more in financing to give them flexibility to address that 737 MAX crisis. And then finally, post-market, some big movers. Tesla popping sharply higher, up 7.5% after they said they see 2020 deliveries above 500,000 units. We also have Microsoft popping higher, up more than 3.5% on a very strong quarter. But Facebook, on the other hand, right now down about 4.5%. It appears that while they've met estimates, the growth is slowing. Investors not liking that. Again, on the day, stocks little changed, mixed, bonds higher, copper lower, net. Wednesday's Wall Street session, after the Fed and after all the earnings and coronavirus fears are factored in, was a bit risk-off. From New York, Abigail Doolittle, Bloomberg News.
I want to speak a little bit more about the coronavirus. The World Health Organization is considering whether to issue a global health emergency as the death toll from the coronavirus rises, and so do the number of cases detected across the world. Bloomberg's Rosalind Chin is tracking this from Hong Kong, and she has the latest. Ros, what are you picking up?
Well, the World Health Organization, as you mentioned, is meeting on Thursday to discuss whether this is going to be considered a global health emergency. They have been saying that if it is classified as such, then it's better for the world to be ready in case action needs to be taken. But we have seen the number of deaths increase to 170. Now, as far as I understand, these are all so far in China, not yet outside of China. And we are seeing the number of cases increase to more than 7,700 now, with including including people who are traveling, of course, around the world, Japanese travelers as well, the latest to be reported, perhaps to be suspected having this coronavirus. Now, this virus, of course, is known to spread quite rapidly, although it's fairly mild compared to things that it has been compared to in the past, like, for example, SARS, like Ebola. It is not in the same category when it comes to fatalities, at least. So the World Health Organization is saying that they will hold this meeting to discuss whether emergency measures need to be taken. We, of course, are monitoring this carefully, and we'll bring you the latest when we have it.
Rosalind, now this has, like you said, been likened to the SARS outbreak in 2003, but one of the major differences is the amount of information that has been shared by the Chinese government. How are other governments reacting to the spread of virus?
Well, of course, they are monitoring this very, very carefully, especially, of course, given the prevalence of air travel these days and the spread of the virus around the world. Now, we do know, for example, that some nations have issued travel advisories advising people not to travel to China unless it's strictly necessary. The UK is one of those. We are, of course, also seeing some airlines and some other companies take action as well. BA, for example, has cancelled its daily flights going to Shanghai and to Beijing. We've seen other airlines also changing their schedules. For example, Cathay Pacific cutting its load to China by about 50%. And also it says that's going to start this Thursday, which is today. We've also seen Delta, for example, Lufthansa among those who are also making changes to their flight schedules due to concerns about the virus, and also, of course, on falling demand, because of the travel advisories, there'll be a lot less people traveling to these big cities in China as well. We've also, of course, seen that Donald Trump, the US president, saying that they are cooperating with China to help combat this virus. He did say the US and China are in close coordination on the coronavirus and protecting the public health of both countries. The president appreciates President Xi's cooperation. So lots of concern around the world from governments as well as the World Health Organization, monitoring very carefully to see whether any action needs to be stepped up as this virus continues to spread around the world. Back to you.
Thanks so much for that, Rosalind, and we'll stay on top of that story as and when we get updates. Thanks so much. Let's move on to the other big story from overnight. The US Federal Reserve has kept policy rates unchanged and delivered a positive view of the economy. Even so, Jerome Powell fueled a bond market rally by highlighting the risks to the economy, including the coronavirus outbreak. Kathleen Hayes of Bloomberg News brings you the latest.
So let's start with where the Fed started. They left their key rate on hold. That was widely expected. And in fact, Jay Powell at the press conference, when he delivered his prepared remarks, he continued the theme. Policy is appropriate to continue to support growth. The labor market is healthy. The consumer is slowing down a bit, but still offsetting weak private investment, weak exports. And he talked about the risks that are still there, how long it may take for the Phase 1 trade deal to even get in place. And when he was asked, he did include the coronavirus as a risk that's lying out there.
We are not at all assured of a global rebound, but there are signs and reasons to expect it. And then comes the coronavirus, which again, it's too early to say what the effects will be. Of course, we're, as I mentioned, monitoring it carefully. There will clearly be implications, at least in the near term, for Chinese output, and I would guess for some of their close-in neighbors, and we'll just have to see what the effect is globally.
And Powell made it very clear, it's just too early to tell, concerned about the human suffering. But he reminded everybody, you know, the United States economy is about 80% dependent on domestic factors. So while this matters, much more matters in terms of what's going on right now. And he continued to stress that he's confident that wages have risen. They're going to continue to rise. The labor market continues to be strong enough. Consumers continue to spend enough. So bottom line, the Fed is staying put when it comes to rates.
And yet when it comes to the markets, it seems we saw this sort of bearish reversal. Stock markets fell, and we saw a rally in bonds. So for these investors, what struck them as bullish, particularly bullish for bonds?
Well, certainly the fact that he put that, he's paying attention to the risk of the coronavirus, right? The risk of the global economy is not firing on full speed, the risk to the Chinese economy. But he also stressed the need to get inflation at or above the 2% target. Jump into the Bloomberg now. Just to remind everybody, as I talk to you about this, this is the Fed's key measure of inflation, the PCE deflators at 1.6%. Hey, There's the target. It's going in the wrong direction. Inflation expectations also easing up a bit. And you know the Fed's in the middle of this big monetary policy review. And one of the things people are trying to figure out, are you going to change the target a little bit? Are you going to allow it to move higher? Fed Chair Powell mentioned that again, at or above target. That I think people took as dovish, including Scott Minerd, who's the CIO of Guggenheim Partners. Listen to what he said about the bond rally.
Taking the uncertainty out of the equation and acknowledging the risks to the expansion, the coronavirus, basically signals to the market that the Fed is ready to do whatever it has to do to keep things going. And if I had to say, was this a hawkish press conference or a dovish press conference? I think it was slightly dovish.
And obviously the bond market agreed. Quickly, let's look at world interest rate projections, because they haven't moved a lot, but the odds of the rate hike, everyone thinks one's going to happen by the end of the year. But if you look at the WRP, you'll see that you get up to 85% by December. In the middle of the year, 73%. So nothing has really shifted in terms of when the first rate cut could come. But let's watch what inflation does. Let's watch what the global economy does, because this does not seem like a Fed that's poised to hike at all. If anything, as our Bloomberg economics team says, if there's a move this year, it'll be a cut.
All right, let's see what else is making headlines across the globe. Sue Keenan of Bloomberg News brings you the first word headlines.
World Health Organization has called an emergency meeting later Thursday to discuss a formal global alarm over the virus outbreak. Governments are tightening travel restrictions, and several airlines are cutting services to China as the death toll mounts. The UN says the entire world must now be on alert. To the U.S. Fed policymakers, the Fed left rates and policy on hold, which was expected, saying the labor market is strong and the economy here in the U.S. continues to grow. However, it says consumption remains only moderate and that investment and exports are weak. The Philadelphia Fed says that economic activity actually declined in 8 states last quarter and was stagnant in 3 others. President Trump, meanwhile, has signed the successor to NAFTA, the trade agreement between the U.S., Canada, and Mexico. This seals a political win that he hopes will nullify attacks on his economic record. The USMCA, as the new trade deal is called, marks a rare piece of bipartisan cooperation, but the Democrats say they were not invited to the signing ceremony. The European Union has followed Britain and stopped short of banning Huawei from 5G. The decision risks sparking a new rift with the U.S., which had lobbied hard for Huawei to be blocked from next-generation networks. Now, China is the EU's second largest trading partner, and Beijing had hinted at repercussions if Huawei were kept out of the 5G rollout. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right, turning our attention to trade and how it's set up for the day, I'm joined by Agam Vakil, who's going to tell you all about that, and also to tell you what's happening in the futures and options space. Good morning, Agam. Well, you've heard everything that's happened in terms of global cues. How are we looking here in India?
Well, at this point in time, Alex, I reckon that it won't be as much about global cues as much as it will be about the run-up to the budget. Let's not forget there's an expiry today, perhaps an important one, though it does seem, well, the numbers do seem to suggest that traders for now are not exactly going in very heavy. But I'm going to come to that in just a bit. For now, the SGX Nifty is marginally in the red. We have seen a lot of traction in the benchmarks, and of course, with the broader market indices doing better. In fact, pardon me, worse as compared to the benchmarks. The banking indices also, moving to and fro, mixed moves coming in, but about 0.3% up move coming in. Your ADRs are again a mix, but we did see gains in Tata Motors ahead of earnings today, and we don't have too much to go for otherwise. In terms of fund flows, again, a large outflow from FIs, but DIs today come in the rescue, and we've had about 1,500 odd crores worth of stock buying from the FIs on a net basis too. We did see HDFC Bank, ITC, Bajaj Finance will contribute to the gains on the Nifty yesterday, which did advance by around 74 odd points. But coming down to your futures and options space, this is around the time when we start seeing a significant pickup in rollovers. And rollovers, as I was mentioning, have not been up to the mark yet. And of course, this is also on the fact that a lot of traders would not want to go and take will take a lot of positions before the union budget. So I reckon a lot of this activity will come back through on Monday, Tuesday following. But for now, 45% rollover standing at, for the Nifty, the Bank Nifty rollover standing at around 39%, all below power, below par, and also, well, lower than the average, previous 3-month average. But let's talk about your options distribution, and we're looking at a 200-point range between 12,000 and 12,200. And in terms of change in open interest, we saw unwinding in the 12,100 call. Also moving on to your wicks, that came off by around 5%, but I reckon this will remain at elevated levels over the next 2 or 3 days. We do have the Nifty put call ratio, which came at around 1.1 against 0.99. And moving on to the rollovers for Tata Motors, and of course we are watching out for this one considering the earnings around the corner. It's gained a lot, and 69% rollovers here. Among the others, we're keeping an eye on Bajaj Finance, very strong earnings coming through, and as a result, we saw it move around the mark of 4,400. 61% rollovers there. Eicher Motors, on the other hand, was under pressures. That's where we saw shorts. And besides Eicher Motors, we are also watching out for something like a Bharti Infratel, which will also be announcing earnings today. So once again, Alex, it will be about earnings. And as far as VIX is concerned, likely to see a rise once again.
Thanks so much for that, Agam. All right, on to the other stocks that you have to watch out for in trade today. Agam's pointed out earnings is going to be key for the Nifty companies. I'm joined by Somit Sarkar, who's going to tell you all about the stocks in news. Morning, Somit. What's on your list today?
Good morning, Alice. I'll start off with the earnings that came in post-market. Firstly, Bajaj Finserv, they reported strong third quarter led by Bajaj Finance performance. Revenues were up 31%, net profit was higher by 32%. Segment-wise, general insurance net income was down 15%, but the life insurance net income was higher by 28% compared to last year. Tata Power results were below estimates. Revenue was down 11%. EBITDA declined by 4%, but a deferred tax reversal of 28 crore rupees did lead the net profit higher by 26% compared to last year. Now, reduction in cost fuel due to amnesty scheme did aid margins of the company in the third quarter of financial year 2020. Pidilite Industries results were above estimates. Revenue were higher by 4%. EBITDA increased by 36%. Net profit was higher by 56% compared to last year. If you see segment-wise, the consumer and bazaar segment revenue was up 4%, while the industrial product segment revenue was up 10%. Overall volume growth for Pidilite was nearly 13% compared to last year. CG Consumer Electrical results were in line with estimates. Revenue was up 4%. EBITDA was higher by 9%. Net profit doubled in the third quarter compared to last year. The profit rose because the company has written back some tax as an earlier assessment order, and that's the reason we are seeing such a surge in the net profit of the company, while slight improvement in the margins was seen due to better product mix and cost saving initiatives taken up by the company. Quest Corp revenues were higher by 36%, EBITDA increased by 51% compared to last year, but the net profit increased by only 15%. Now, margins expanded due to lower other expenses and Ind AS impact in the third quarter of financial year 2020. Also, the company reduced its stake of intercompany loans to around 442 crore or to rupees 172 crore in the third quarter of financial year 2020. And lastly, among results, IDFC First Bank, the bank reported a loss for the 5th consecutive quarter, and a core operating loss was also seen in the third quarter. Loss was due to one-off provisions for telecom and infra accounts, and core operating loss was because of higher underlying credit costs. In other stocks to watch, firstly, Indigo, because the shareholders have voted against their co-founder Rakesh Gangwal's proposal to ease rules on selling stake in the company. Now, special resolution in the EGM received only 48.6% vote in favor of the resolution. Hindustan Aeronautics, because the government is looking to sell nearly 15% of its stake via an offer for sale. Meghmani Organics, because they are looking to restructure its business by demerger of its agrochemical and pigment business into a wholly owned arm, Meghmani Organochem. And the company also said that the Meghmani Organochem will be listed on the exchanges through mirror shareholding structure. That is, 1:1 share will be given to to these shareholders. And lastly, MOIL received an environmental clearance for enhancement of production capacity from 90,000 tons per annum to close to 203,000 tons per annum, and the clearance received for its manganese ore mine is in Maharashtra.
All right, thanks so much for that, Somit. Now, another stock that you have to watch out for, and Agam pointed this out as well, Tata Motors is expected to return to profit in the December quarter thanks to the contribution from Jaguar Land Rover. Forum Bhatt has this report.
Well, the company is expected to report a net profit this time around after reporting a loss for 2 consecutive quarters. Revenues, however, are expected to decline by 4% at about 74,052 crore rupees. Net profit is seen up at 673 crore versus a loss of 26,993 crore a year ago. EBITDA seen up 30% and margins are seen at 10.9% versus 8.1% a year ago. Now, on a standalone basis, the company is expected to report a decline in revenue. This is basically on account of a decline in sales volume for the company. So if you see in this quarter, the company recorded a 25% decline in sales volume. Now margins are expected to be in the range of 0.7% to 3.3%. Average selling price, however, is expected to increase marginally for the company. Negative operating leverage and high discounts is something which is going to impact margins this time around. Now JLR on the other hand is going to report strong numbers which is going to aid growth for the company. Volumes are expected to be in the range of 1,28,000 to 1,30,000. Revenues are seen in the range of GBP 6.4 billion to 6.7 billion. Margins are seen between 12.3% to 13.2%. Higher average selling price is expected for JLR this time around. Higher contribution from China is something which is going to work in company's favor. Now, other than that, the company also has a favorable product mix. If you see, the mix of Land Rover in the overall volume mix has gone up, which is going to benefit the company. And other than that, margins are also going to increase on account of cost reduction efforts and better product mix this time around.
Right, now Bajaj Auto is also expected to report a steady set of numbers as sales volumes remain subdued. Forum has got this report as well.
Well, subdued set of numbers are expected for Bajaj Auto this time around. Revenue is expected to decline by 5% at 7,059 crore rupees. Net profit is seen up 8% at about 1,194 crore. EBITDA seen up 10% and margins are seen at about 17.9% versus 15.6% a year ago. Now, revenue is expected to decline on account of decline in volumes once again. Now, if you see in this quarter, the company recorded a 5% decline in the sales volume. Lower contribution from premium motorcycles and decline in three-wheeler contribution is something which is also going to impact the growth for the company. Other than that, average selling price is expected to increase for them. Now, this is basically on account of price increase in select models. Realizations are expected to record a degrowth on a quarter-on-quarter basis, and margins, however, are expected to go up on account of lower raw material costs this time around.
All right, let's turn to Indian Oil Corporation also, which is reporting its numbers today. Inventory gains are expected to offset weak refining and marketing margins. But to tell you a little bit more about the key numbers to watch, I'm joined by Somit Sarkar. Somit, what are the key expectations?
Well, if you see the headline numbers, the revenues are expected to be higher by 11%. EBITDA is expected to see a jump of 81%. Margins are expected to come in higher at 5.2%, while the net profit is expected to see a jump of nearly 4 times compared to last quarter to close to 2,500 crore rupees. Now, the gross refining margins that are expected to come in at around $3.6 per barrel. However, the strong numbers are only on the back of an inventory gain as against an inventory loss reported by the company last quarter. However, some of these gains would be offset by a weak refining and marketing earning margins that the company had seen in the third quarter of financial year 2020. Now, the Singapore gross refining margin that averaged at around $1.7 per barrel versus $6.5 per barrel. However, Indian Oil Corporation's margins are expected to be higher than the Singapore gross refining margin, and that is due to higher inventory gains and lower fuel oil production by Indian Oil Corporation in the third quarter. However, the company's core GRMs that are expected to decline to $2.4 per barrel from $3 per barrel reported in the last quarter. Now, though Brent crude averaged similar to last quarter at around $62.4 per barrel, the crude prices have risen nearly 9%, which is the most in the last 3 quarters. And on the back of this, analysts are expecting an inventory gain of close to 1,300 to 1,800 crore rupees versus an inventory loss of nearly 1,200 crore rupees reported by the company in last quarter. On the marketing side, if you see, the gross marketing margins on petrol and diesel averaged around 3.2 rupees and 2.25 rupees per litre, which is lower compared to last quarter, where the average was around 3.4 and 3.7 rupees per litre. And on the back of this, the marketing segment could report some weak numbers. However, higher sales volume from the marketing segment would aid the marketing segment's performance in this quarter. Now, on the refining side, again, if you see the crude throughput, that is expected to be higher by 3.4%, while the sales are expected to be higher by 4.6% compared to last quarter. Now, analysts are also expecting some forex loss because of the adverse movement in the exchange rates, and on the petchem side, they're expecting a weak performance due to weaker product spreads, and as a reason, the petrochemical EBITDA is expected to be sequentially lower. Now, the key things to watch out for from Indian Oil Corporation earnings would include the gross refining margins and the marketing margins outlook. Along with this, inventory and foreign exchange gains, petrochemical performance, gross debt, and pending subsidy dues from government would be important to watch out for from Indian Oil Corporation earnings today.
All right, so Amit, you're also tracking the last company or the Nifty company, that's Bharti Infratel, and the third quarter profit is likely to fall the most in 12 quarters, according to the estimates. What is leading to that?
Well, the net profit fall is just because of the normalization of tax rate, because last quarter they had adopted the lower tax rate. That's the reason there was some bump up in the bottom line because of the deferred tax reversal, and that's the reason we are seeing this drop. Operationally, the numbers are expected to be weak. The revenues are expected to be flat at close to 3,600. EBITDA is expected to be higher by only 1.1% to close to 1,900 crore rupees. Margins are expected to come in at 52.1%, while the net profit is expected to decline by nearly 18%. The tenancy ratio is expected to be flat at 1.85 times. Now, a flat revenue and higher energy revenues and net tenancy addition will be partially offset by a revenue loss and past tenancy exits for the company. In this quarter also, the company will continue to get nearly 90 crore rupees from tenancy cancellation, and higher energy margins would overall boost up the EBITDA margins of the company, but the energy business is not the core business of Infratel. So overall, if you see, the operating numbers could be weak for Infratel, and if you see, the consolidated net profit is expected to drop, as I mentioned earlier, because of normalization of tax rates. Now, the key things to watch out for from Bharti Infratel earnings would be include merger with Industar's, management commentary on the impact of telecom companies' payment on AGR-related liabilities, along with this gross tenancy addition and tenancy cancellations in the third quarter, and any updates on organic fiber rollout or any inorganic plans would be important to watch out for from Bharti Infratel earnings today.
All right, thanks so much for that, Somit. Now, you'll find a lot of stories on the website, BloombergQuint.com. Some of them we've spoken about already. Let me take you through a couple more. The Reserve Bank of India has imposed a penalty of 1 crore rupees on HDFC Bank for non-compliance with Know Your Customer norms. The RBI, in a release, said that the supervisory evaluation of the bank in 2016-17 revealed that the bank had failed to exercise ongoing due diligence with regards to 39 current accounts opened by its customers for bidding in initial public offers. And crude oil declined overnight as US crude inventories rose by the most since November, raising concerns about oversupply, particularly when global demand is seen under threat because of the Chinese coronavirus. The Energy Information Administration reported that American crude stockpiles rose by 3.5 million barrels, which is more than analysts had anticipated. Well, that's a wrap on this edition of All You Need to Know, but do stay tuned. Like I said, there's a lot more to read and to view on Bloomberg Quint. Thanks so much for watching.